Everyone, this is Jay Harris, Chief Option Strategist for Tom Gentile. I have a video presentation for you. It's an awesome technical chart pattern and how to trade it. In the visual, you see a horizontal line, and then you have two corresponding arrows. Those are what I've placed on this chart to emphasize the pattern I want to train you on. I'm going to show you the pattern setup. I'm going to show you how to possibly trade it with options, and then we're going to show you how in Tom's tools you can find these technical patterns. What we're looking at is a situation where the markets have been reaching all-time new highs. Now, they've traded off the all-time new highs recently, and if you feel, though, that you've missed out on that market move to the upside, either on an index or on a stock or ETF, there are times where the markets will give you another chance. So what we're doing is we're looking for an entry point on a pullback on a specific index or market or a specific security. And this is what I'm calling target shooting. What we're doing is we're assessing a target price where the security may find support. And it's at that support that you look to say, well, this security is now on my crosshairs. It's hit my target on a pullback. This is where I think that we have support. And if it holds support and bounces from here, maybe it's worth a shot at taking an options trade on it. What this pattern is, it's called old resistance becomes new support. And yes, it works in the inverse. You can have a situation where old support becomes new resistance. But since we've been in a pretty healthy uptrend, we're going to focus on the old resistance becoming new support. Here's a picture of Visa. Ticker symbol is V. You can see that we're at a 52-week high, or we were at the start of September. It has or had established a pretty solid resistance at around 200. Here's a visual to show you that resistance. 1, 2, 3, at least 4 separate times since May, Visa has tried to break above 200. But that's what resistance is. It's like a ceiling. It's a price where a stock resists going any higher. And 200 was that resistance until mid-August, where it broke out and established now at the 1st of September, that 52-week high. The question is, if you like Visa, you want to be involved with Visa, you just don't want to get involved with it at this extended level. Where is a price that you can look for a pullback? Where do you place your target? That if it pulls back to that target price, you'd look to reestablish either scaling into more stock. And this is a situation where, folks, if you are just a stock investor, technical analysis can still be viable and helpful to you. You don't necessarily have to buy these things at the 52-week highs. We've had videos on those, and there is a substantial case to be made for looking at doing the 52-week high trade. But if you think it's gone too far, too fast, and you're looking for a pullback, this is a situation where we find out where we want to place our crosshairs. Where do we want to target shoot this stock at getting into this if it gives us another opportunity? So there's that $200. That was that previous resistance. That's now new support if and when it comes back down to it. But for right now, what you can do is place your crosshairs there, and when it hits that target price, it pulls back to your crosshairs, you can consider taking a shot on that. Now, you may want to look for it to hold that price and bounce a little bit, or get aggressive right at that support price. That's your decision. But anyhow, when these things break out to 52-week highs or break out of a resistance zone, look for a stock to pull back to that old resistance as new support and consider jumping in on a trade for that. Here's that situation where it's old resistance now becoming new support. Again, if you wanted to be aggressive and take an option trade, that 3 trading days ago, that's a consideration. It's just that your stop's real tight and you don't have another day or two follow through where it has actually bounced off that support. But if you do take it on either of these 3 trading days, either at support or after it's bounced off of it, you have to now talk about managing your trade. Where or what is your stop? Now, you can place a point drop as a stop or a percentage of the option price, like a 50% stop if you like, or you can use this technical stop. This most recent pivot low is happening as possible new support, which was previous resistance. That could be not only the launching point for a trade, but also your technical stop when it comes to managing the trade. Now, how to trade these? We are going to give you a consideration of the call debit spread. The call debit spread, some know this as a bull call spread. Again, it is a debit, it is a cost up front. It's where on the same order ticket, you're looking to sell to open an option strike, and you're going to do that at a strike just under the current price of the security. And on the same order ticket, buy to open an option strike that's just underneath that sold strike. And you're going to do both of those options on that same order ticket at the same expiration month. Once I go to the tools and we show a situation on Visa and how to find a call debit spread to consider, I'm then going to show you how to find these. You're going to go to tomsoptiontools.com. You'll go to the 52-week high list. You're going to look at the charts of those starting at 10% off their 52-week high, or those that are at 90% of their 52-week high. And to do that, you'll log in, you'll go to stocks analysis, and click on the high-low line item. And I'll do that for you. But first, let's get to the tools, shall we? Here's Tom's Option Tools. Again, it's www.tomsoptiontools.com. We're going to hover over the Options tab, hover over Option Chains, and click on that to bring up the option chain. If your symbol isn't the one you want, click in the stock symbol box and change it to the one you want. I brought up a picture on V where we had that old resistance becoming new support, and it's bounced off it a couple of days. So let's go to V. And we want to look out at least the next month's expiration. You can do weeklies if you like. If the reward is there, the risk to reward is a situation that you like, you can choose whatever options expiration you like. We're going to look out the 30 to 45 days. And so that's going to be the standard expiration, or the third Friday for October. I'm going to click on the October 16th. I'm going to click the check mark on the September 11th to get rid of that. So we're only going to bring up the chain for October 16th. And then I'm going to click on Update. And you can scroll down now after it's updated. 36 days remaining. And I said we want to look at selling the strike just underneath the stock price. 204.78 is the tool's recent price. So let's look to sell the 200. So under the trade number, that's the number of contracts. And to sell a contract, you're going to put a negative in front of the number. So -1 means one contract we're selling. You want to then look to buy to open a option just underneath that one that you sold. So if we're selling the 200s, let's look at a 195 and just click on the number 1 there. So what it shows us now is we're buying a 195, selling a 200 October 16th call option on Visa, and we'll click on the risk graph. When the risk graph page comes up, you'll see the risk graph right there, but let's focus on the numbers. We're looking at an entry debit of $325. So that means it's going to cost us $325 to do one contract. And if we spend $325, and if this exercises for the max profit we're going to bring in is a 54% return. How does that work? Real quick, we are on the same order ticket, selling the rights for the market to buy the stock at 200. We have also bought the right to pick up the stock at 195. So if and when the stock gets picked up at 200, that's exercised out of your account, you exercise your right for the account to pick up Visa at 195. What you're doing is picking it up at 195 to replace it at your obligation of 200. Now, you're not going to have to worry about the stock settlement and the stock times the number of shares and the commissions for that. It's going to exercise on the width of the strikes. It's a $5 wide strike. That means if it gets called out at 200, you buy, which is your right at 195 to replace at 200, your account's going to bring in that $5 per contract, or $500 on the one contract. So if you're bringing in 500 and it costs you 325 up front, that means your max profit is going to be that $175. That's a 54% return. You can play around with the numbers and ask for a better price. You can shave the numbers and try to ask for an entry debit of 3 if you like. But folks, there's a nice little 54% opportunity that's available to you if you can get these fills. What you want to have happen now is the stock to be trading above 200 at expiration. And how do we feel confident about that? Well, again, the chart pattern says old resistance, 200 becoming new support. So if it holds that 200 and trades above it, doesn't matter how much higher above it, just so long as it's above 200 at expiration, you've got the opportunity for that max profitability to come your way and that percentage gain. Now, let's get into how to find these. You go up to Home, Tom's Tools, or you can just go straight to the Stocks tab and hover over Stocks, hover over Stock Analysis, and then left click on High Low. Here's your number of weeks, 52 weeks. We're looking for those with the latest high close for the weeks chosen. looking for those with the latest high of the 52 weeks, and we can choose whichever stock list we want. Let's go to the S&P 500. Now that we have all that fixed and set how we want, we click search. You can see that it resets the page and it brings you up the stocks that are at their 52-week highs. And it shows you the 100%. They're at their 52-week high right now. But we wanted to find those that are on a dip, on a pullback. So we want to go about 10% down or 90% of their high. So scroll on down until you get into the 90 percentile right here. And then don't click on the chart link. You're going to bring up a chart in a separate window or tab. You're going to have to close that and come back to this page. Just click on the pick. When you click on pick, it'll superimpose a chart on top of that page. And you can see it's off the 52-week high. Has it found a support area? Well, you can make a case for any of this slope as a support. So it's not as crystal clear as we would like. Let's go ahead and take a look at Haynes brand. Click on the pick. It brings up the chart. And if you want to get rid of the chart, just click on it and the chart will disappear. Here's a recent 52-week high, either on that close or that high right there. And it's peeled off a little bit. You can make a case for this previous price point of 15. You know, there was a area of resistance maybe that is now testing as possible support. Even that's not as pretty as we'd like. Let's go down. I think I found one on Census that looked pretty clear. Here you go. Look at that nice upward sloping trend. And we had a 52-week high about 6-7 trading days, and it has pulled back. And you see this consolidation of resistance right here around 320. That 320 previous resistance could be acting as new support right now. If that looks comfortable for you to initiate a trade, it's your call. Go for it. Otherwise, if you want to see a little bit more of a pronounced bounce off of that 320 price before initiating your trade, go for it. But if you're going to consider a call debit spread and this is going to hold as support, you'd at least start entertaining selling a 320, maybe buying a 310. At least use the risk graph and the tools to entertain what that looks like and go from there. So there you have it, folks. You have an awesome technical chart pattern, which is an old resistance becoming new support. You can consider the call debit spread on this technical pattern. And I've showed you that through Tom's tools, you can look up the 52-week highs and lows and look for the stocks that are about 10% off their 52-week high and see if that's testing a support area, and then consider initiating your option trade from there. Hope you've enjoyed that, and we'll see you on the next videos. Bye for now, guys.